Good morning, I'm Raine Musñgi and welcome to Follow the Money. Join us as we explore the tools and insights you need to jumpstart your financial journey. The Philippine Stock Exchange is still in a post-rate cut high, with the main index flirting with the 7,000 level. How can new investors take advantage of the current rally, and what should be the key considerations in investing in Philippine stocks? We're now joined by Juanis Barredo, First Vice President and Customer Experience Officer at COL Financial. Juanis, good to have you again.
Hello, good morning, Ray.
May we know what first are the key factors to consider before you invest in Philippine stocks for the first time?
Well, I think it's important that people prepare themselves first mentally because, of course, investing is a challenging ordeal, especially for those newbies. Preparing what they have to be able to invest is the first thing they should do, maybe a certain percentage of what they get to save as an investment, and then prepare to do that investment over time as again just putting it all one time, big time. And then, of course, take some time to be able to learn about the investment you're about to make. Study some of the companies that you're going to be investing in, or maybe even funds if you want to go through mutual funds or UITFs. And do understand that it takes time for companies to grow. So some people begin with the wrong expectation, thinking they will make 50% of their money instantaneously. That doesn't happen here. So it takes time for prices to appreciate. And to also understand that the riskiness of markets will really be generated because of volatility, and that's something else that they should prepare for before getting started.
Certainly, that's a lot of warnings, but in recent days, this kind of rally at the stock exchange, what kind of gains have you noticed recently?
Well, it had become broader in the beginning. It was very, very selective. Starting off with some of the telco stocks started to jump out quite strongly, and it was quite remunerating for a lot of investors who've been there for quite some time. And it started to broaden up, especially after the rate cut managed to be able to unfold itself here in the Philippines. And I think that was really what everybody was really waiting for, because it signaled that the period of high rates is about to subside, and that bullish front helped quite a bit of the market.
You know, it's good that you're making qualifications about the timing of a particular investment, especially since it's so easy to get into the stock market and, get disillusioned by how much time it takes before you start to see gains. How should a retail investor then diversify their stock portfolio in the Philippine market to mitigate risks? What are the most promising sectors, perhaps, in the Philippine stock market right now?
Well, I think it's important for them to understand what they have to look for. I guess the most important thing is to be able to follow earnings. And that means just make sure that the company you're getting ready to be able to invest in is doing well, and the essence of their growth is all intact. So earnings has to be there. It has to be doing quite well. If earnings is coming out better than anticipated, more likely you're going to see appreciation into that stock rather than have to wait too long for it. So yeah, I mean, earnings is one of the biggest factors that you probably would want to be able to see. And right now, the market's watching things like power companies, very selective on the consumer stocks. REITs are also very much in mode right now because coming from a high rate period that's coming back down, REITs may become more attractive for that. So, we like names like Meralco, Jollibee, Juanis Power, and AREIT being some of our research heads' favorites.
Definitely, company performance affects the valuation of the stock, but also we have geopolitical and local economic indicators. Given the current landscape, what kind of tips would you offer to earn from Philippine stocks?
It's, I think, very important to be able to diversify right now because, like I said, although you want to be able to make sure that you're participating in the ability of the market to recover, not everything is all climbing at the same time. So you're going to have to be able to have a broader type of cast. Your net has to be able to capture quite enough for it to be able to make sure that it partakes on some of the industries that are doing better. And so, for example, some of those that I mentioned earlier seem to be doing okay, and those that a bit are hurt, but let's say by high rates, that might take some time to be able to adjust itself, or there are certain worries about properties because of the pogos leaving. So it might take some time, maybe for the other types of property issues to follow. But I am seeing some advances as well, so it's nice to see that. The second thing I'd also say, aside from being diversified, is I think you don't have to be extremely over positioned right now. Always make sure that you're underbought. That means that you have some spare cash on the side just in case the market decides to show a hiccup or a pullback, where you can take advantage of that type of decline and buy into these particular stock favorites that you're currently looking at. Because I will continue to see shakedowns in this market because we're not extremely in a bull market yet, and there's still some headwinds that people will have to talk about.
I know that for beginner retail investors, perhaps they may not be as courageous to enter the international markets or equities just yet. But meanwhile, have you or do you think international events like changes in U.S. interest rates or regional geopolitical tensions, have you seen them impact, or are they expected to impact the Philippine stock market? Lots of people watching the U.S. elections right now.
Mhm. Yes, I think two significant events will really cause some gyrations into the market. First will really be the U.S. Rate cut that is anticipated in September. Although everyone's expecting it already, I guess what people are talking about is how much of a cut. So if the size of the cut is bigger than what is anticipated, and I think that might cause a bit of a hiccup into share prices. So if they're just cutting rates little by little over time, and that shows that they're very much in control of the situation and that they're not worried about any economic slowdown that might come as an aftermath to this. And I think markets shouldn't really, choke too much on that. It's if they start cutting fast that people might say, "Whoops, something wrong is happening," and they're being quite aggressive in their ability to cut rates. I think that might cause the market to worry a bit. Elections, not so worried about that. We've seen elections come and go, and normally after election periods, markets in the U.S. normally go higher after a little bit of volatility. So not so much worried about that.
We'll be back with Juanis and more of his advice in a moment. We're taking a quick break. Follow the money. We'll be right back. Stay with us. And we're back. You're watching Follow the Money. Let's continue our conversation with Juanis Barredo of COL Financial. Juanis, are there indicators or signals that investors should be watching out for when deciding to enter or exit the market? Is there a timing that you're following?
Well, I think on the macroeconomic side, the most important really would be anything that will affect fund flows. And so when we mean fund flows, we're talking about things like uh, interest rates, the direction of the market, any particular risk that may come in that might subdue the ability for fund flows to come in. Because if we don't have money coming in as investments into the market, then our market might just move sideways, if not just drift down. So it's essential that we should have a good degree of that. Second is you also want to make sure that the companies that we're looking to buy has all the necessary ingredients to be able to create that fund flow inside its situation. For example, I think picture you're showing right now is an example of what we look for in a company, and we look for gems, and that means we want to make sure that the company is in a growing industry and its earnings is picking up instead of slowing down. Management is something that is not even questioned because everybody in there is an expert and they know how to handle even things in a risky period. And of course, they must have a durable product or superior service or product so that we can make sure that nobody comes inside to steal their thunder, because everybody's going to want to come back into this particular type of product as a consumer. So if you have all these necessary ingredients and your macro sides are all quite positive, I think that should be quite subsisting to keep those particular stocks or the market or which they're involved very much into the upside.
Juanis, just on the side, how have equities performed against other asset classes at the moment? So if I was a retail investor trying to decide where to put the money, if there was only one asset class that I could put it in, would equities be a good option?
I think it's very important to understand that timing is also a crucial factor here, because in a period where interest rates are very high, the stock market tends to underperform. And so, if you were to ask me that question 1 or 2 months ago, our market would have been quite flat. In the last couple of weeks, we've seen our index climb up from a low of roughly 6,200 all the way to where we are today, and seeing a gain of about 8 to 10% in a very short period of time will easily command itself above any other type of asset class. So right now, bonds normally were doing quite well in the last few years, and now we're start seeing some money come back into the equity market because they feel that because the period of high rates is over, they're starting to diversify back into riskier assets like stocks, and so far they've been rewarded.
And considering all these things, is there an outlook for the equities market that you're looking at and for the next 6 to 12 months?
Mhm. Well, I'm not sure if you have a chart of the PSEI index there, but so far our markets managed to be able to climb back closer to 7,000. Yes, that one. And this is going to be the first area of resistance that we have. In fact, in the short term, this was the initial targets we were looking at, all the way to about 7,200. And if we can somehow break this band, then that should be able to open ourselves up for a stretch out to 7,550. Within that 1 year period, you were saying maybe we could even stretch out to 8,200 down the road. But let's take that one step at a time. Like you said, we do have a U.S. cut to be able to deal with, and the elections. And I'm hoping that it won't be too volatile, but that's something we also have to prepare for. Also, August and September tend to be volatile months for the local market and even the U.S. market. So prepare that when September comes along, we might see some choppiness along the way. But I think at the way the market's doing, we should be able to commandeer ourselves above 7,000 within this year and stretch out a little bit more come next.
From retail investors to international to institutional investors, what do you think the market has to be, or what do you think the market wants to see from the companies, from the economic landscape before they flood the market with more investments, more funds?
I think the people here should understand that the Philippines should look at themselves as if we are a competitor to the rest of the world. And companies that are performing have to show very stalwart type of performance to be able to attract those types of investors into their direction. So good stories, good dividends, potential storylines that of maybe companies either expanding. These are the things that you want to be having to see. And if that can reflect well on our GDP, like so far it has in the last couple of quarters, this is the reason why we probably see a pickup in foreign investments in recent months. Not too long ago, but only just recently. And that perhaps, along with the firming of the peso and the pullback in bond yields, were quite an improvement in sentiment. And this has been quite a bit of a turnaround in this last couple of weeks. And that's why we've seen a relatively explosive rally.
Well, that's actually a good thought to leave our audience with. Juanis Barredo of COL Financial, always a pleasure to speak with you. Thank you so much for joining us today. We appreciate it.
My pleasure, Raine.
And before we go, we'll leave you with a quote from American businessman Shelby M.C. Davis. Invest for the long haul. Don't get too greedy and don't get too scared. And that's it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Bilyonaryo News Channel, always on top.